Hey guys, Ben Faber of the Faber Real Estate Team with Compass here to tell you about how's the market. Well, we're seeing a resurgence of buyer demand even during the holidays with ultra low levels of inventory. Mortgage rates have decreased, and we're about to go in the details of why we're start to seeing a little bit more confidence in the marketplace. First, mortgage rates have fallen almost 80 basis points in the last 6 weeks. That's almost 1%. So why are mortgage rates falling? Well, the signs that the Federal Reserve is looking for, which is 2% target uninflation and moderate unemployment, that is balancing out. We've gone from high levels of inflation in 2021 and 2022 to seeing core inflation hover around 2.5%. And I think the indicators are pointing that core inflation will continue to decrease to 2% and even below 2%. And once we get lower than that 2% target, then we're going to start to experience deflation, where prices actually go down. And the Federal Reserve doesn't want that to occur. So finally, we're starting to see the effects of almost 18 months of rate hikes. Investors continue to be confident in the fact that the Federal Reserve is done with its rate hikes, especially after the release of cooler October job openings data. So right now, the next Federal Reserve FOMC meeting is taking place next Tuesday and Wednesday. So keep track of December 13th. We're anticipating the Fed is going to hold rates firm. That's also going to give confidence in the market. And then the first FOMC meeting of 2024, and just so you guys know, FOMC is the Federal Open Market Committee meeting. This is where the Federal Reserve announces their monetary policy, typically on a monthly basis. So the first FOMC meeting is going to take place in January, and the high-level investors are talking about potentially the first rate cuts occurring at the March 20th FOMC meeting. The Federal Reserve has an annual beige book. And in that beige book, they have 4 of their Federal Reserve districts reporting modest growth, 2 districts reporting flat to slightly down, and 6 noting slight declines. So the majority of their districts are noting slight declines. This is exactly the data that the Federal Reserve has been hoping to see from their rate hikes. We're also seeing mortgage applications surge to the highest level in 6 weeks. So, how's the market? What's going on in the local real estate market? Well, right now on the multiple listing service, there are 5 coming soon listings. There are 155 active listings. 32 properties are contingent, which means they're in contract and the offer includes contingencies. 43 are pending, which means the seller accepted an offer and the buyer has removed all contingencies. So between the contingent and the pendings, you have 75 listings that are in contract. And if you divide the 75 listings in contract by the total amount of inventory on the market, which is 230 total, 33% of the listings are in contract. So out of 10 houses, a little over 3 houses are in contract. That leaves almost 7 other listings available for sale for the marketplace. We're seeing an average days on market at 35 days on market and a sale price to list price just under 100% at 99.76%. So that implies that listings are selling for approximately what they're being listed for. And then regarding the pending properties, well, those properties are averaging 51 days on the market. And when they count days on market, they're counting how many days it takes for the buyer to remove all the contingencies. So you could make an offer and have contingencies removed in 14 days, and you could also make an offer and have contingencies removed up front. So 51 days on market before the buyer's removing all contingencies. And then let's just talk about rates real quick. So I have to disclose, I am not a lender, loan officer. I do not have my NMLS license. We work with some excellent lenders. Happy to refer them to you. Just wanted to give you some quotes that are directly on their website, and I can send you the links to their website if you'd like. So one, Insignia Mortgage, a small broker out of Beverly Hills. I've personally done a transaction with them. They have some really niche products for high net worth individuals. They're selling a 3-1 ARM, meaning the rate is fixed for 3 years and then it adjusts every year after. They're currently at 5.875%. That is an excellent loan product, especially if investors are confident that rates will decline within the next 6 to 12 months, especially within the next 3 years. If you go to the Wells Fargo website, we have a specific contact at Wells Fargo who is fantastic, has an impeccable reputation in Marin County. Wells Fargo, it may include a 1% discount point that they're quoting on their website. For a jumbo loan right now, they're quoting a 7.6 ARM, meaning it's fixed for 7 years and then it adjusts every 6 months at 6.25%. They're also selling the standard American 30-year fixed loan at 6.5%. And then if you go down in the loan amount, you'll hit a conforming loan, which is backed by the federal government. The federal government subsidizes that conforming market. And right now they're doing a 30-year fixed at 6.5%. Also, JVM Lending, a small broker in the East Bay, is quoting an FHA loan at 6% and a VA loan at 6%. They also sell what's called a temporary buy down. You can do a 3-2-1 buy down where you can take the rate from 6% in year 1 to 3% in year 1, 4% in year 2, 5% in year 3, and then years 4 through 30, it goes to the current market rate of 6%. You can ask the seller to give you a credit to pay for that temporary buy down. It's a very creative way to keep your monthly payment low. And the beautiful thing about a temporary rate buy down is you get to recoup any cost you spend on those points that you would not get if you were doing a permanent rate buy down. If you guys want to have a consultation, grab a cup of coffee, feel free to use me. I am a fantastic resource for you, and I would love to be of value to your real estate experience. Happy holidays. Happy Hanukkah.